Hello learners, greetings. I, Nilakshi Arora, Assistant Professor, Department of Commerce, the Bhopal School of Social Sciences. And I am here today to explain you the important terms under GST. So let's begin. The first term that we are going to discuss today is the definition of India under section 256 of the CGST Act of 2017. It says, India means the territory of India as referred in the Article 1 of the Constitution, which includes territorial waters, seabed, subsoil underlying such waters, continental shelves, exclusive economic zones, and any other maritime zones. It also includes the airspace. Now let's discuss this definition. The first thing which was given in the definition was the land area. So this is the land area. So anywhere which is in the which is the part of India where we are living includes in the definition of India. Second thing which was given was territorial waters. So territorial waters extends up to 12 nautical miles. That is, we count from the land area up till 12 nautical miles. This is the territorial waters. Here, if you take a ship ride and you want to roam here and there, you can roam in this area. But you cannot go beyond this area without the permission of the government and having the valid passport area. In this area, any part of the sea can also be accessed. You can go and do fishing in this area. You can take out seashells from this area. It is allowed. That is also included in the definition of India. Coming after this, up to 24 nautical miles, that is 12 nautical miles here plus this 12 nautical miles is called as the continental shelf. This area specifically is given for custom officers, so that custom officers can do the investigation, can search into your ships and vessels. After this area, we have up to 200 nautical miles special economic zone. Special economic zone simply means the exclusive area which the India is having for some oil extraction, some mineral extraction. So like this is the picture of Mumbai High that we have, Bombay High we call it. So this is also included in the definition of India as per section 2 subsection 56 of the CGST Act. Next is the definition of goods under CGST Act, which is given in the section 2 subsection 52 of the CGST Act. Goods simply means every kind of movable property. So anything which is moving is a movable property that is included in the definition of goods. Secondly, it also includes actionable claims. Actionable claims simply for your understanding can be lottery. You can take the money of lottery only after you have won that lottery. So that's an actionable claims. It also includes growing crops, grass and things attached to or forming part of land which are agreed to be served before the supply under a contract of supply. It means, say for example, there is a plant which is supposed to be installed in a factory. So what you are going to do, you brought all the parts of the plant and machinery from here and there and you are going to attach it to the land so that a plant can be constructed, a machinery can be constructed. So even that land and machinery which is affixed to the land is also the part of movable property under the definition of goods. Why this clause is being given? This clause is specifically given because in the first point it was telling that only movable property are included. And this, when the plant and machinery is going to be affixed to the land, it becomes the immovable property. So that's why they have specifically explained this topic. They have also said that even growing crops are included in the definition of GST. That means it's included in the definition of goods, so it will be covered under GST. But it does not include money and securities. So money and security is out of the scope of GST. That means if you give somebody a rupee 10 note, if you give somebody a rupee 10 note, you're not going to give GST on that. Hai na? It doesn't happen that when we go and buy some goods and services, we never say that on rupee 10 give the amount of GST. We only give the amount of GST on the goods and services which are procured by us. To summarize this section, it says that section 2 subsection 52 gives the definition of goods, which means movable property. It excludes the definition, it excludes money and securities, but it includes actionable claims, it includes growing crops and anything which is forming or attaching to the part of land, that is also included. We'll come to this part. First, let us discuss the definition of services. Let's move to the next definition, that is section 2 subsection 102 of CGST Act, which gives the definition of service. Service means anything other than goods, money and securities. That means goods, money and securities is not included in the definition of services, but includes. So there is something which is included, that is anything relating to use of money. Use of money means I went to Western Union money transfer, and I wanted some exchange. So what I did, I gave them some $100. The exchange rate which was prevalent at that point of time was 80 rupees. So instead of giving me 8,000, they have deducted some charges on that. That charges is the use of money or its conversion because of use of money. Another example can be interest which is paid by us to the banks. When we pay the interest, that is also in the consideration which is being charged by the banks. So that is also included in the definition of service. Coming back to the previous slide, section 2 subsection 102 defines services, which means anything other than the goods, and a separate consideration has been charged for the use of money or any activity arranging the transactions in securities. We can take few more examples here. Like first one can be, bank pays us interest on our FDs or on our saving bank account deposits. There also the bank has a liability to deduct GST, but presently that transaction is being exempted. So the bank does not deduct GST on the same transaction. Let us move to the next definition now. Next definition, which is very important for us to understand, is the definition of taxable person. Who is the taxable person? Who is the person responsible to pay the tax under GST? So section 2 subsection 107 of the CGST Act gives the definition of taxable person. Taxable person means a person who is registered. Who is registered means who has actually taken registration under GST by following all the principles and procedures given under the GST. So he actually went to the GST portal, did the login, and he has a proper GSTN number. Next is liable to be registered either under section 22 or under section 24. This we will discuss in detail in the chapter of registrations when we discuss that module. Presently, just for a brief understanding, section 22 gives us the ceiling limits, that if your turnover exceeds a certain limit, you need to get yourself registered. And section 24 gives us the specific transactions. Like it says that if you are an input tax distributor, you need to have a registration. If you are a person who is liable to pay tax under reverse charge, you need to have the registration. If you are a casual taxable person, you need to have the registration. So such instances are given under section 24. Moving further, now children, there are certain important terms for us to understand before we move to the definition of supply, which are intrastate sale and purchase. Intrastate sale and purchase simply means that when the transaction of sale and purchase is happening within one state, that means seller is also of Madhya Pradesh, buyer is also of Madhya Pradesh. Or seller is of Delhi, buyer is also of Delhi. So both the purchasing party and the selling party belong to the same state. Interstate sale and purchase. Interstate sale and purchase means when either buyer or the seller belong to different states. That means, for example, seller is in Madhya Pradesh, buyer is in Rajasthan, or seller is in Delhi, buyer is in Andaman and Nicobar. So they both belong to separate states or separate union territories. In this case, it is interstate sale and purchase. If a transaction is within the state, we charge tax called as CGST and SGST. The best example which you can remember is when you go to restaurants and you buy something, you pay CGST and SGST on those transactions. Rate may be 5% of the either or 9%. And when you buy something from different state, like when you buy goods from Flipkart, Amazon, and the seller is in different state, that person charges IGST on your transaction. That is interstate goods and service. So IGST and CGST, SGST. Children, say for example the rate of IGST is 10%. Then the rate of CGST is going to be 5%. And the rate of SGST will also be 5%. So the rate is always equivalent. It is just that it is divided into two parts, SGST and CGST. On purchases, we collect a tax or we pay a tax to the purchaser, that is called as input tax. On sales, we pay a tax called as output tax. Whenever input is more than the output, we can ask government for the refund or we can adjust the excess in our future payments. But when output tax liability is more than the input tax liability, we are supposed to pay the amount of tax to the government. Let us understand these terms with the help of an example. So, Mr. A supplied some goods or services for rupees 24,000 to Mr. B. Mr. A did what? He has sold. In GST, supply means selling and purchasing. So, he has sold some goods to Mr. B and the value of goods is rupees 24,000. The value is given exclusive of GST. That means GST is not included in this amount. So, we will write plus the amount of GST. Mr. A purchased goods and services from Mr. C. So, from where Mr. A have procured this goods? So, Mr. A have procured this goods from Mr. C. So, this is a purchase transaction. What is the amount? The amount is rupees 20,000. Exclusive of GST. That means here also the amount of GST has to be added. Mr. A, B and C are resident of MP. That means this transaction is an intrastate transaction. Why? Because all the three parties belong to the same state. So, it is actually an intrastate transaction and not interstate transaction. The rate of CGST which is given is 10% and the rate of SGST is also 10%. So, that means this is the summary. Mr. A purchased from Mr. C, Mr. A sold it to Mr. B. Now, let us continue solving the question. Children, whenever we do purchase, we charge input. Whenever we do sale, we charge output. This input can be of two types, either CGST and SGST or IGST. Similarly, output can also be of two types. Either you can collect IGST or you can collect CGST and SGST. So, in this example, as you remember, it was intrastate sale and purchase. So, that means in both the transactions of purchase as well as sales, we have CGST and SGST. Let us solve it now. I'll write here CGST, SGST. First, we will write output tax. This output tax is collected on the sales. Amount of sales is 24,000. Rate of CGST is 10%. So, 24,000 into 10%. That amounts to 2,400. Similarly, 24,000 into 10%. Here also we are going to have 2,400. From where have we purchased? We have purchased the goods from Mr. C. So, on purchases, which tax do we collect? We collect input tax. So, I'll write less input tax. 20,000 is the value on which the rate of CGST is 10%. 20,000 into 10% gives you 2,000. 20,000 again SGST rate is 10%. So, that is also 2,000. So our tax liability in this example is going to be 400 rupees of CGST and 400 rupees of SGST. So this Mr. A is going to deposit CGST 400 rupees and CGST and SGST 400 rupees to the GST department. Moving further, if you have input tax credit of SGST, it shall first be utilized in the payment of IGST and then you can utilize it for the payment of SGST. Similarly, if you have input tax credit of CGST, you will utilize it for the payment of IGST and then for the payment of CGST. And input tax credit of IGST will be utilized for the payment of IGST and then for the payment of CGST and SGST. If you can draw a conclusion from here, the conclusion is CGST input and SGST input cannot be used with each other. CGST input will only be used with IGST and CGST, and SGST input will only be used with IGST and SGST. They cannot be used with each other. So children, in this module, we have actually understood the basic definitions which are necessary for understanding the concept of GST. So we have understood the definition of India, goods, services, taxable person, input tax, output tax, tax liability, interstate supply and intrastate supply. In the upcoming modules, we'll be discussing the concept of supply. Thank you.